Hello, welcome to another Hershey Financial Advisers economic update videos. My name is Greg Boll. I'm the managing partner here at Hershey Financial Advisers. I wanted to just kind of give a quick update of what happened in Q1 2025, kind of look back at the last couple years, and already into Q2, we have substantial changes almost daily at this point. So economist consensus right now, at literally as of yesterday, the consensus report in the Wall Street Journal of economists that they poll suggests that unemployment is probably going to go from lower to mid fours up to about 4.7 by the end of the year. We're looking at right now, consensus for the economists are that inflation is going to go from 2.8 core, probably to 3.6 by the end of the year. And right now they're suggesting that GDP drops from where it is now in the twos down to less than 1.8 to 1. Again, that could change 3 days from now. The major issues on the table is where the Trump administration ends the negotiations with all the other countries that they are trying to change the reciprocating tariffs. Do they actually get a lower tariff, or do they actually end up with higher tariffs? Obviously, we all know that there's been a lot of discussion. Is the goal to generate more revenue and change the way the United States government generates revenue? Is it to offset some of the revenue that will be lost from extension of the tax cuts from 10 years ago? There's an attempt by the Trump administration. Obviously, there's a lot of legal battles and a lot of questions and a lot of information that is not known yet at this point. But the attempt is to reduce the spending of the federal government. I'm not sure. I think there's probably few people at this point who really know how that is probable to go. So at this point, what I would say is, if you look back at the economist consensus the last 2 years, it's been pretty far off. The economy was supposed to go into recession, 60% chance by the consensus of the last 2 years. And certainly the stock market has done fairly well last year and even the year before. I will say this, it's something super important as we look back and look forward. The market was definitely driven by tech. AI is a powerful tool. We are definitely seeing the use of it. It has boundaries like any technology and anything new. But we also can look back and say, that drove the stock market in the late 90s. And certainly the internet's a very powerful tool, but assets do get overpriced. And so we're paying attention to that, and we're trying not to get over concentrated in any asset class. We're also trying to pay attention to the fact that things can shift. And certainly we do believe that there is an opportunity to look for both opportunities and threats. And although things are happening very quickly, we want to pay attention to major shifts, and in which companies will do well in the future compared to those that have done well in the past. So I think that's very important. What's really important too is to recognize that each person, each of our clients, each of you is different. And as we meet with you and do our best over the years to profile what your understand you and know you well, and make sure we have a portfolio that's designed to meet your goals and objectives and your risk tolerance. We talk about the quality of life. We want you to enjoy the ride and not just have a target at the end and you're holding your breath till you get there. And we think a lot of financial advice ends up in that camp, that there's too much risk and there's a lack of understanding of the complexities and the risk and what the assumptions are. So we do think that in general, when we look out right now in the last month and look at the reaction and look at the research coming in and the companies reporting concerns, we do believe that there's a lot of asset classes that are outside their normal range, and we're very focused on that. So if you think that your risk profile or anything major changed in your life, please let us know. Reach out to us if you have questions or concerns. Always reach out, set up a phone call, in person or Zoom. But we want to make sure that that you feel comfortable. We're here for you. This is our purpose. This is not a market that we did not design our portfolios to withstand. We expect it could get way worse, and we've got this. But I also want you to know that when you're talking to other people, there is definitely an observation that there are opportunities for people that are not with our firm and assets that you might have outside of our firm that could be in need of a significant look at the risk profile and the opportunity that exists for those assets to get repriced in a negative way. So please stay tuned and contact us anytime you have concern or question. We appreciate you. Thank you for tuning in, and we look forward to talking to you soon.